Well, a very good morning from Prague. CTP here, headquartered in the beautiful city of Prague. With the H1 2024 results, before we get there, maybe have a look back at the start of our IPO 3 years ago, a bit more. Since the IPO, March of 2021, we've been able to double the business in terms of size, means lettable area, rental income, value. And it has been a fantastic ride so far. Thank you very much for all your support. Before we did the IPO, we thought maybe this is going to slow us down. We're going to change the culture. It's going to be less entrepreneurial. It's going to be less dynamic. Well, that has not been the case at all. I mean, numbers don't lie, as I say. And obviously, this growth would not have happened if we would have turned into a bureaucratic big organization. So it has been very good, not only from a financial point of view. The IPO also brought us different systems and processes and procedures. So CTP became a better company, more effective and more efficient company, with compliance, with all other good things. So it became a better company. Also, it was one of the targets, better access to capital with cost of capital decrease, and that has also been achieved. Another important point, I think, is the labor, so staff, colleagues. With a listed company, you can do all kind of share option plans and so on. We have been able to do that, which is good, which gives also key employees and any employee an opportunity to own shares, which is the case. CTP employees all own a share of CTP and will have opportunity, of course, to own more. So the IPO has been very good so far for many reasons. And that's looking back. More importantly, okay, what are we going to do with this fantastic company, with all these people? Well, that's the land bank, and that's 25 million square meter. 25 million, massive. 20 million of that is owned. 5 million approximately is under option, the right to buy, subject to getting permits and so on and so on. Most of that land is within existing business parks. So you can build additional property within that park for existing tenants most of the time, or for suppliers or 3PLs, whoever comes in and need to be part of that park. We believe in Europe for Europe. We believe in Europe overall. So there is demand coming from defense industry, automotive industry, semiconductor industry, consumer goods. I'll talk about a bit later. So there is good demand for good properties in good locations. This year so far we signed 918,000 square meter of leases, which is up 8% compared to 2023. That means we do more deals in 24 than we done last year. Also, we do those deals at higher rents. We continue to see rental growth, same square meter. We now get more rent than a year ago, but for the same square meter we pay a bit less construction cost now than we did before. A couple of deals, I will come back to that later, but we have done different for fashion retailers like Primark. We did previously. We just closed the deal with LPP in Bucharest. Also wanted to mention completely different business, semiconductor business for Taiwanese based Quanta. We have many Taiwanese clients. Actually, out of our total is more than 10% is Asian clients, and that is growing. Also thanks to our office in Hong Kong, thanks to our presence in Taipei, thanks to our offices in China, which helps us get closer to Chinese or Asian companies and help them set up shop and business in Europe for Europe. Quanta, I mentioned Quanta, is a project we do currently in Jülich, close to Aachen, and it's a semiconductor production facility in Germany. At the same time, we're also doing projects for Taiwanese clients in the Czech Republic, of course. And in order for us to capitalize on that, we have a team of people, currently 800, so we continue to hire people. We've been able to hire more than 60 people this year so far. Turnover reduced, so we're also able to keep good people involved and engaged in CTP. CEE core market, whereby we continue to remain market leaders in the CEE region, but also grow footprint in other markets. Germany, I mentioned, that was always, when we did the IPO, the target to go and grow, set up shop in Germany. We have been able to do so. I expect quite a lot. Also think at the moment is a good moment for us to enter Germany and do some land banking. We see good opportunities to invest now and to, benefit from that over the years to come. We will continue to develop property in Austria, especially in the capital of Vienna. So overall, the business outside of the core market, let's say the CEE, it also develops well. Short update, as you know, we split our business in three. We have operator, the income producing part of the business, all the properties which we own. Properties are in good condition. We continue to improve, refurbish, upgrade. Occupancy is okay. We like to be 95. We are around 93, but this August now, I've seen some take-ups. I talked about tenants, reliable, stable, good companies, growing. We do collect the rent on time, and that's good. And talking about the rent, we're currently looking at €1 billion of rental income per year by 2027. So the business has grown a lot. I still enjoy it very much. Also myself, I'm involved in the day-to-day operations of the business, but it seems that it's really possible to continue grow. We see demand. Of course, markets are changing. It's not just growth. Changes opportunity. That's what we see. That's how we think. Entrepreneurial, hands-on, can-do attitude. But yeah, lots of opportunities in Europe for Europe. The developer is the guys and boys who build properties. Yeah, mostly properties within existing business parks. We are looking at how to improve different properties constantly. The slogan is every next project is a better project, so we continuously improve. Smarter buildings, nicer buildings. In Germany, for example, we like to do smaller units. We do the same in the Czech Republic for many years. Not just big box, but also some value adds. Also science, technology park, lab space. Also here and there combination with housing, affordable housing, because our projects create jobs. And for jobs you need people, and for that you need housing, and there's not always housing available. So often and more, we see our parks and our developments as an all-in solution, and not just, okay, here's a building and the rest is your problem. No, we look after all the services, facilities, maintenance, repairs, but also beyond. Always we said the tenant should be able to focus on his core business. That's where his profit is. We do the rest, the building and all the stuff. So housing is one other thing. So when I mentioned, we are talking about developer, they build buildings, but also they're very much involved in innovation and how can we do more. Building new properties, yes, we will do. We will. The target remains 10% yield on cost or more. Yeah, and we build for the future, so we build quality stuff. Also buildings, generic design, which we can use for many different usage. So far this year delivered 328,000 square meter. More than 90% leased. We're still leasing at 10.7% yield on cost. We have under construction quite a lot. 2 million square meter. I'm not saying that we can all of that complete this year, but around 1.5 million square meter maybe. Out of the 2 million square meter, almost 80% is being built within existing parks. It's again a confirmation that that's really our core business. Continue to develop properties within full service business parks, which are located in strategic locations. Wanted to highlight some larger projects. 55,000 square meter we do for Inventec, Taiwanese in Brno. Very happy and proud of doing a project for Raben, 115,000 square meter in Warsaw. Tesco, of course, 100,000 square meter in Budapest. Almost 100,000 square meter for H&M in close to Bucharest. So those are the big ones maybe, and then we do here and there all type of different things for 3PLs, last mile, showrooms, boxes, R&D centers, but also for companies involved in manufacturing. Yeah, so that is what we do. 4 property types plus 1, which is the CT Fit, whereby we do adjustments to satisfy the needs of the specific needs of a tenant, you could say. Solar is going quite well actually. That's the third business line. Buying solar panels and mounting them on the roof is one thing. Getting them up to speed and getting the business operational is a second thing. But we're getting there. So it's good. We see good results in some countries. Also, all different countries have different legislation. Yeah, so solar business is different in Germany compared to what it is in Holland or in the Czech Republic. So far good. Actually better than we thought. Yield on cost wise, this is a better business than our construction business. I can talk for hours, but I'll hand over to Maarten and remain available for any comments or questions.
We're standing here at the construction site of CT Park Prague North, which is part of CTP's network around the Czech capital, right next to the highway connecting Prague to Dresden. This park illustrates CTP's strategy well, growing in existing locations by building the next building for existing tenants. The new phase 2 you see here behind me, and there is already lots of construction activity going on, is slated to include some of the most sustainable buildings in Europe. It will also include our clubhouse community center, sport facilities and greenery, creating an attractive workplace for our tenants and their employees. The park is designed for a wide range of businesses, from local to international companies like existing tenants, Macro, a food wholesaler, Albert, one of the leading Czech supermarkets, several logistics providers, and manufacturers like AAC Technologies, which produces interactive sensory technologies. The development is the largest in the Prague region, with a site offering midterm potential of over 300,000 square meters. This also feeds into our valuation and the huge opportunity we have with our 25.5 million square meter land bank. Assuming a 50% build-up ratio, we need 2 square meters of land for 1 square meter of GLA, which means we can build over 12 million square meters of GLA on our current land bank. Taking into account the average construction cost of 500 euro per square meter and land prices of 50 euro per square meter, the total investment cost for 1 square meter of GLA comes to 600 euro. This, while the standing portfolio is valued around 950 euro per square meter, allowing us to realize a potential development profit of 350 euro per square meter. This will enable us to continue to generate organic double-digit NTA growth, also in the years to come. Now looking at the H1 valuation results. The gross asset value of our portfolio grew to 14.8 billion euros, up 8.5% compared to year-end 23. The H1-24 revaluation amounted to 436.7 million euros, mainly driven by our standing assets and the leasing and construction progress on our developments. Our standing assets increased on a like-for-like basis by 3%, as the ERVs increased by 2.9%, while yields remained stable. CTP's reversionary yield now stands at a conservative 7.2%. And looking ahead, after the 80 basis points increase we experienced in the last 2 years, we are at a clear inflection point for yields. In addition, we do foresee further positive ERV growth in the CE region. In most CE markets, inflation-adjusted real rents remain lower than 15 years ago, illustrating both the affordability of the region for our tenants as well as the rental growth potential. Our EPRA net tangible assets per share increased from €15.92 year-end 23 to €17.05 as of 30 June 24, representing an increase of 7.1%. Moving on to the financial highlights. The like-for-like rental growth came to 4.8% in H1 24, driven by indexation and strong rent reversion. The reversionary potential increased to 15.3%, and we have proven to be successful in capturing this potential for leases that came up for expiry. Our gross rental income for the period increased by 14.4% year-on-year to 320.9 million euros. The net rental income went up by 17% year-on-year as we reduced the service charge leakage. Consequently, the NRI to GRI ratio came to 97.8%. The company-specific adjusted EPRA earnings per share increased by 11.2% year-on-year to 40 euro cents, on track to reach our guidance of 80 to 82 euro cents for the year.
I'm joining you here today from inside Macro's Regional Distribution Center, which includes classical warehousing facilities in chilled, frozen and ambient temperature zones, as well as an automated racking system that you can see behind me. This is a great example of the flexibility of our properties, which feeds into our tenant retention and high level of repeat business, which support our strong profitability. Now turning to our financial position, we have a robust balance sheet and strong access to multiple pools of capital. In total, we raised 1.7 billion euros year to date, of which 1.3 billion euros was unsecured and the remainder secured. To proactively manage our upcoming maturities, we repurchased 750 million euros of our short-dated 2025 and 2026 bonds, realizing a capital gain of 31.9 million euros. Our cash position stands at 1.1 billion euros, more than sufficient to meet our cash needs for the next 12 months. When including our RCF, which we increased to 550 million euros, our liquidity position amounts to 1.7 billion euros. The average maturity of our debt stands at 5.2 years, with no material debt maturity until June 2025. At the end of the first half, CTP's average cost of debt came to 2.38%. This will continue to tick up going forward as we bring on new funding at today's higher interest rates to finance our development-led growth. 99.7% of our debt is fixed or hedged until maturity. Thanks to our strong cash-generating portfolio, we have a healthy interest coverage ratio of 3.1 times, while our normalized net debt to EBITDA stands at 9.2 times. Our loan-to-value ratio was 46.2%, up 20 basis points compared to year-end 2023. This increase was driven by acquisitions, but largely offset by positive revaluations. Excluding our recent Romanian acquisition, loan-to-value would have been 45.6%. This is slightly above our 40 to 45% target range, but we expect the LTV to come down as the revaluations of our developments become fully booked. We are confident in the outlook for CTP. We have a strong leasing lead list and continue to see rental growth across our markets. Nearshoring is speeding up, as highlighted by Remon. Our pipeline is highly profitable and tenant-led, and thanks to our industry-leading yield on cost of over 10%, we are able to deliver sustainable and profitable organic growth, even in the current higher interest rate environment. We continue to grow our EPS and deliver double-digit NTA increases, outperforming the market. We confirm our EPS guidance of 80 to 82 cents for 2024, and we target to reach an annual rental income of 1 billion euros by 2027. Thank you for your attention. We now welcome your questions.